Hi, and welcome to another weekly recap. So, today I'm going to recap week 5 of April 2025. So, this week I just got only one losing trade, and it was actually a good loser. The trade actually played out, but the price took out my stops and it went in my favor. So we'll see what happened on this week and why I didn't get any trades on all these days and what happened on this loser and what is the reason behind taking this trade and why it ended up as a loser. So I'll explain you step by step on each day, on each analysis, what is the psychology behind, and everything will be given crystal clear. So let's jump into the board and see what happened on April 7, 2025. So starting with April 7, 2025, the daily swing structure is bullish. The internal has shifted bearish. You can see the internal has shifted bearish, and this now becomes the high probability POI where the price can respect it and then it can continue to push down till the price reaches this equilibrium, or the price can even mitigate this POI. And suppose if I get any strong confirmation here, then I can conclude that this high now becomes weak and can be targeted. But for now, so this was the overall story being built for this week. So what will happen currently for this day? So we can expect to play longs targeting the supply above, or if the price makes if the price st- uh, keeps respecting the supply, we can continue to play sells till the price reaches the demand zone. So we are having both longs as well as sells in our arsenal today. So this is the 4-hour chart, and you can see the 4-hour as boss bullish. So after the price as boss bearish, we can expect a swing pullback. So there is a possibility of the price pushing up to mitigate this 4-hour demand, 4-hour supply, which is within the daily supply, and the price can push down to mitigate the daily demand though. So that was my expectation. So coming to H1, here you can see very clearly a low resistance being built up, and this is the 4-hour POI. So initially I thought I can look to play longs targeting the 4-hour POI, but the POI is very near, which means I won't be getting enough risk to reward to target the 4-hour POI. So all I can do is I can wait for the price to mitigate the 4-hour POI and then wait for a strong bearish shift, and then a freshly formed POI would be great to look for sells and targeting the sell side liquidity below. So the plan was very simple. So there was no complicating biases. So there is only simple pro swing, pro internal bias. But at 10:49, the price liquidated the internal range liquidity and then it had chalk bearish, which means the price took the buy side liquidity and now it's ready to target the sell side liquidity. It did not. It does not want to mitigate the supply above. It is what it is. Like, we must adapt to the market conditions. So this becomes my sell side liquidity endpoint. So if the price goes above without mitigating sell side liquidity, then I would be confident and I can look for sells targeting the sell side liquidity below. Did that happen? No. uh Price just took out the sell side liquidity below, and this now becomes a strong POI because it was formed via sweep of liquidity, and it has got an inducement right here, and it has also got some displacement. So if the price moves up, mitigates this POI, then I can look for sells directly using the M15 because this POI was formed today, so it's still valid. But it was actually the end of the day because it was 4:35, 2:35 p.m. So just 25 minutes more for the session to end, which means around 1.5 candles to be printed in M15, and in H1 it is just one candle to be printed, and this is the last printing candle. So whatever this candle be, I was not interested in looking for sales, so I just got off the desk. So this is about April 7. So let's move to April 8 and see what happened on this day. So as discussed, price continued to push down. Price did not mitigate the supply above. It directly mitigated the demand below. So now what can I expect? So this is also a high probability demand zone. Why? Because it has swept liquidity and it is not in the discount, but still it's still valid because this is a very large range and price might make a small pullback and continue the bullish run further up. So this is high probability POI and price came down with sharp momentum. So I don't want to look for a buys directly because of this bearish momentum, and there is also an opening gap. So I don't want to long enter for get involved in buys directly. I just want some lower time frame confirmations before getting into that. So when the price mitigated the daily demand zone, this was the 4-hour chart. 4-hour as was bearish, and the equilibrium range was somewhere here, and this was the POI, which which was below the equilibrium range. But this POI was was in the premium, it and within the daily supply, and it has got inducement with the displacement. So a ton of criteria was a ton of confluences was aligning for this POI. So I was not interested in this POI. Rather, I was interested in this POI because it's a straight push, a straight push down. So there is no inducement below. So the only liquidity availability top of this leg. So I was I plan to look for longs, targeting the buy side liquidity above. So yeah, price swept some sell side liquidity formed a fresh demand zone and chalk bullish. So if the price comes down, I can look for longs directly using the M15, targeting the first. This would be my first target, and this would be the second target. So did it happen? No. Why? Because price came down and it did not make any LC1s, or I was not interested in LC1s. It did not make any LC2s, and there is no entry in the M15 confirmation entry. So here you can see this is H1. I'll show you in the M15. So price mitigated the demand here, right here, and there is no I was not interested in taking the LC1s because this POI was formed in the spread hours and it was not recently formed, so it was not even formed during the kill zones. Though this could act as an LC lid, I was totally not interested. I was waiting for a pullback investment, which did not happen, by the way. Okay, once the price, internally was bearish in the M15, then I was kind of sure that this internal structure to can continue, and price can take out the buy side liquidity above. So I was confident in looking for long, so I waited for the price to come down to mitigate into the 61.8 level. So yeah, price actually mitigated the 61.8% level and then made a short move up and then pushed up to hit my TP. But the caveat is when the price reached the 61.8 percentage level, it was already 330. So which means I don't trade at 330. I don't trade during the London lull, New York lull period. So that's why I missed this trade. So this is what happened. A beautiful trade, but it happened during the London lull period. So which I don't want to get involved. So it was as per my strategy. I didn't miss any trading opportunity. So it was as per my strategy that I missed a trading opportunity. So coming to April 9, You can see the daily has mitigated the demand zone. So what we can expect now? So probably there would be a large imbalance here. I can expect the price to push up and mitigate into the daily supply zone. So by the way, this is the supply which is holding the price. If the price flips this one, then I can be strong that the price wants to move further up. It can even invalidate the daily supply above. So for now, what I can expect is price mitigated the daily demand zone, and the price had chalk bullish. So simple expectation would be price to flip this supply to take out the buy side liquidity above. It's as simple as that. And yeah, it actually happened. It actually happened, but this POI was not respected. Rather, it got broke out. Sorry, it was broken, and the price went further up to the next POI. I don't know why, but this POI was broken. So which was high probability POI, it was broken. Probably this was used as an inducement for this POI. So once the price reached the equilibrium, mean the premium prices of H1 and mitigated into the extreme supply. So now I can look for shorts when the price chalk bearish, confirming that the bearish move would continue. So for that I waited for the chalk, and finally I got one. Yeah, actually this was a losing trade actually. Yeah. Sorry, okay, there was a sell side liquidity right below here, which is also called as lower resistance liquidity. Price reached the premium, and price had mitigated the 4-hour supply, and it has also chalked bearish. So what can I wait for? And this POI had swept liquidity and chalk bearish. So what can I wait for? Look for an entry model in that POI and target the sell side liquidity. It's as simple as that, right? So that's what I did. So here you can see uh, this was the lead. Price mitigated this POI. So this price mitigated this lead, and this was actually my liquidity candle. So I placed my order 0.5 pip above and placed my order 0.5 pip below. A bullish candle came up, took out my stop, and here again the stop was this my stops was taken out again, and then the price started to push. The real magic happened, and the price mitigate and the price hit the TP. So it was actually why I didn't keep stop loss, because it was actually a 23 pip candle. So having 1 pip stop loss above and 1 pip displacement buffer below would increase the capability of the trade setup. So moving on into April 10, that is Thursday. Okay, price was still pushing up, so I was expecting the price to continue this bullish momentum till the price takes out the daily supply zone. So in the 4-hour, you can see that the price I was bearish, and once the price bearish, the price has also chalked bearish, chalked bullish, which means the price can continue pushing up and mitigate the daily supply above. So I plan to take trades from here, but it did not work because the price did not mitigate, and this was my second POI where I looked for longs, but again it also failed because the price never reached the POIs, and the price just made a constant push on the upside. Thus, the uh, POI is not mitigated, and there is no trades on this day. Okay, coming to the last day of this week, the price mitigated the daily supply. So now what we can expect is the price can, chalk bearish in the lower time frames, and the price can push down, taking out the low, or this is a straight push and the only liquidity available would be above this high. So the price can start to push further up, take out this buy side liquidity, and then start to push down. So anything could happen on this day. So this is the 4-hour chart where you can see the 4-hour as was bearish, and the price is within the 4-hour supply, which is within the daily supply. So I can uh, and the prices also mitigated the 4-hour supply. So all I can do is wait for the chalk to play out, and from the freshly formed POI, then I can look for shorts targeting the demand below right here. Okay, and yeah, this was a kind of low resistance liquidity being formed. So I was not super interested in looking for sells because sometimes there could be large wick, and then because of the rejection, price might want to push further up to take out the buy side liquidity above. If the price chalks bearish with a strong body closure, then that would be a compulsory action, which may lead to continuation of the bearish internal structure. But something different happened. Price actually swept the sell side liquidity and chalk bullish, which means that the bullish internal order flow is going to continue. And I marked all my areas of values, but at 12.6, price trail just okay at 12.6. The price reached the 4-hour premium and also mitigated the extreme 4-hour supply, which was my target. Price actually mitigated the 4-hour supply, which was my target. So now looking for sells is bit high probability than looking for longs because price is coming up from a valid supply zone. So now this is the last screenshot that I took. So price formed a kind of equal highs above. So definitely this can be taken out. So price can come down on Monday, chalk bearish or chalk bullish, I don't know, whatever it is, and then the price can push up to take out the buy side liquidity above. So you can ask me whether I can enter directly on Monday using M15. Then I would suggest it is not advisable because at the start of the week, market could go anywhere. It could go anywhere. A lot of fundamentals could happen on the weekends. So because of that, there could be an opening gap, and the price can travel anytime, anywhere. So it is not advisable to place a risk entry or use M15 directly on the Mondays. Especially there is a dilemma whether the price will gonna go up or come down. So yeah, that's it from my side. So I didn't get any profit, so I just got only one losing trades, and that was a very much valid losing trade. So yeah, that's it from my side. See you tomorrow, guys. See you the next week with a fresh weekly review. So until then, cheers, guys. Bye.